Right. How much smaller are your red days or losing days relative to your winning days? Well, the last 3 prop firms I did, I averaged during the challenge phases, each phase would take me about 10 days and I'd have 1, maybe 2 losing days in there. But the amount lost was obviously not worth the amount that I gained on the average days. In general, on a really bad losing day, I might lose the same as I would winning on a winning day, but my winning days happen more often. So it might be like 20%, same 20% of my days might end in a loss. That's probably a fair average. But I wouldn't say all of those losing days will be equal to 1 winning day. They might be equal to like half a winning day on average, because my risk to reward is reasonably good. And even though my risk to reward is only like 2 to 1 normally, the amount that makes a difference is quite significant. Even on a 2 to 1 risk to reward, because my win rate it's enough that I could have 1 losing trade and 2 winning trades and I'm very much in profit. I could have 2 losing trades and 1 winning trade and I'm at break even. So at that point it becomes very easy to get yourself to like a 60-70% of your days being profitable or break even. And I would always consider that if I end my day on break even, that's a profitable day because I didn't lose anything. But yeah, control your risk to reward and you'll be halfway there. Risk to reward is something we'll cover probably later on. Alright. Trading with indicators. Trading with indicators for me is the fun bit. Now I would say it's the fun bit because that's what I'm used to. And it's also what I've spent the last over 6 years of my life doing and building. Now, when you're trading with indicators, you have to ask yourself the question, what does the indicator do for you? You might want something that tells you the volume, but realistically, it's not really going to be an accurate volume reading. You can for crypto because you can see on balance volume, but for stocks and forex you never get to see the order book, so you'll never truly see the volume. There are approximation tools. For instance, this and this. You can see that there is volume indicators, but they're not really that good. And in general, I'd never use one because I don't see the point. They're not accurate. Now, other things you might want might just be something to give you a trend direction. Go and use a moving average. You can use anything you pretty much want. Crypto fee and wave trend, for instance, technically is trend direction. It's these for a shorter term one and this for a longer term one. You can even use the histogram for a wave for an average direction. There are a million ways to get a trend direction. When you're trading with indicators, your point is to reduce the amount of places that thinking involves. Thinking occurs. Sorry. The biggest problem people have with trading is they think too much. Their systems are not mechanical, and because of that, they will make decisions based off their emotions and their mood. It might be, it's going upwards, and then they'll say goodbye, and then they'll see a little pullback and go, that's it, it's going down. And they'll close their trade that hasn't quite hit profit yet because they've seen it rejecting and it looks like it's going to go down, only for it to then continue going up. Because people get emotional, numbers on screen go brr, it's much easier to trade a mechanical system. Now, trading mechanical systems is very boring because you lose all of the emotion. And on a deeper human level, but we are all emotional beings. Now, how do you build a system? I would usually start pretty simple. Now, as someone whose business revolves around it, I'm just going to show you the ways that I do it for customers. Basically, now, for me, obviously, I have my own, I've built indicators that I've basically completed systems. So this will be a bunch of indicators put together to make a signal, and that's the trade. So how do I do that? Let's start with, I'm just going to pick some indicators pretty seamlessly. We're going to grab an RSI, for instance, just a standard one. We're going to grab moving average. Three moving averages sounds good, saves indicator space. And then we're going to want, I usually like to have two off chart indicators usually. Pick that one, that'll do. Right, how do I want this to look? I kind of want one spiky, let's make it spiky. And then how are we going to define how we want to trade it? Let's make you 13, 20. Make that 34 for instance. I'm going to change pair because the background colours are annoying. Make it thick. Make it thick. To me that's not logical, but we'll go with it. Right. So, how would I be looking to trade a system? In general, what you want is you want to find key defined points of how you make your trade. I don't like that RSI, let's get rid of it. So it might just be that the three moving averages are in the right direction and you have a crossover to the red on the TSI. So for instance, you would take your short off the end of that candle, and remember you're always trading at the end of a candle with indicators. You're not trading during a candle because a signal can change during a candle. And then however you want to set take profit and stop loss could be, could set it a million and one ways. Let's go get an ATR because that's usually a good way of doing it. What does an ATR do? ATR gives you the average amount of movement per candle. That's all it does. So in CHF-JPY, the average 1 hour candle moves by 22 pips. So you might do some kind of, I don't know, 2 ATRs, what would that be, 44? We'll go a little bit higher. 44, and we're going to say, I don't know, 3 times that amount for take profit, so there. And that would be your trade. And once you've back tested it and you go, yep, that statistically works, then you just keep doing it and you don't stop doing it. How do you know if it works? Well, you go and fill out one of these. So the way you do it is you scroll way back in time. You pick a time frame first of all, so I'm going to pick in this case the hourly. You scroll way back in time. Far as you can. You'll know when you get there, you'll see the crown. Now we need all of our indicators to have loaded, and because I set it quite high on time frame, about there. Right, and you would go and do the following. So I need to find where it's going to cost to get a trade in our direction, which would be here. So for instance, we would mark up that we are taking a buy on that the end of that, one candle over, the end of that candle, because that's the candle it went from red to green. and all three are in the direction that we want. So I would mark it all up. It's a long, put the date in, put the day of the week, the time, and then if I just do, no, wrong direction, long, we went, so 30 is what we're going to want. It's almost irrelevant for me to drag this to 3, but I'll do it anyway. And then we can see that in this case it lost. It hit stop loss on this candle. So we'd go in, mark it as a loss. I leave a thing that you can put the screenshot in, so I could just go copy link like that, paste it in, and then I can go and go, right, here's 300 trades, all screenshot. And this bit I don't have to touch because it does it all for me. This bit, if I set that to 4, it just works out 4 RR. If I set it to 2, it works out 2 RR, and I just put an initial balance. It doesn't really matter. All this is doing is giving you a rough idea at the end, not including commission, obviously. So this would be if you're taking spread instead. And then it'll give you, it will spit out a profit factor and win rate. It'll tell you if you give it the right RR. So for instance, on a 5-to-1, you only have to win 16.67% of your trades, and if you were on a 2-to-1, you've got to win 33% to break even. It's going to tell you your breakdown by session and by hour of the day. The by hour of the day is pretty useful. You can then go and check your profit factor. If you're at like a 0.95 or higher, you know that you're in profit, and if you're under that by a lot, then you'd go, well, then I don't see any point in trading, for instance, these 3 hours of the day, because your win rate isn't there. This one I would probably say I wouldn't trade either, but this one I probably wouldn't trade either, but you can see the majority of the hours are pretty good. Like this one's 1.5 win profit factor, that's huge. This one's 1.8 profit factor, that's huge. If you can get a 1.8 profit factor, you're pretty set for life there. So you would go and fill out a spreadsheet. You can get a copy of this spreadsheet and just gut the entered bit out and fill it in yourself. But you build just a base level system. Then let's say you've done 300 trades and it didn't work. What do you do next? Well, you have to sit and determine, is it the stop loss size? Is it the take profit size? And the way I would normally do that is I tend towards just going, well, let's cut the take profit down a bit and see. So I might go from a 3 RR down to a 2 RR and then run the test again. And then I might do one at 1.5 times RR. I like to be in the 2 RR and plus range, so for me I would ideally pick a RR that's like 2.5, somewhere in there. But if it is profitable, and you might find that for certain pairs it is, then you can use it. Now, when it comes to this works for this instance because every single hour of the day has a shit ton of trades. Like, if you're taking an average of, 50 trades almost minimum, there's a few hours where it's a little bit less, but on most instances it's like 50 trades minimum. That's enough volume to really determine if, hey, this works. You got to think, how many trades were there? 1,600, I think. Yeah, there's 1,614. Well, 1,613 because it starts on one sell down. So that is a good number of trades to be looking over. This is multiple pairs combined. Now, I'm not expecting you to go and do a test this big straight up on a method you don't know. You want to build something and tweak it to get it so that it's running just about in profit on one pair. And I would pick something like GBP CHF would be a solid pair to start with. It's got some movement, but it's nothing wild. But if you pick like GBP CHF, bang, you build something that's just about in profit. It only has to be just about in profit. So profit factor like 1.1, 1.05, because that's a profit factor of 1.1, but you can see that in some of the good hours, your profit factors are like 1.5, 1.4, 1.25, 1.4, 1.3, 1.5. Like, there are good hours even amongst something that's just slightly above average. Then, you've now confirmed that one pair kind of works. Go pick the best days of the weeks and times of the day. So for instance, on this, I've filtered out just which each individual pair, which days of the week it doesn't do it. So for instance, this only really worked during London session, so I only include London session, and only on the days it was good. And that's kind of where this comes into, because you can see your breakdown by day. So for instance, what I would do is I'd go fill it out and 24/7 it, and then go, right, are any of these particular days really shit? Yes. Then I get rid of the particularly shit day and then check the numbers again, because you might find that one day's average is so low it drags the rest down. So for instance, like this day, if I include Friday on this pair, it drags the average down by so much on the hours that it can actually eat into the profit factor and make it negative, because that one particular day is so bad. So you would use this and go, right, cut that day of the week out. And you can see that I could, in theory, cut Monday out on this pair as well. Did I? I don't think so, but you could, in theory, cut Monday out. And it will raise your averages. You're basically looking to find something that works in some of the time, because you don't have to trade all the time, you just have to trade when your system tells you it's good to trade. So, if you've determined that a method just doesn't work, like it flat out doesn't work, what do? You have to start considering what you want to try. Now, my usual thing is to add a different condition in, not, like for instance, the ATR. I know that the ATR across things is a perfectly fine way of setting stop loss and take profit. I can do that, that's fine. But you have to look at your entry conditions. So, for instance, using an ATR, I have no issue with that regardless of the method. So I know that that's probably not going to be what I start with, because realistically a method that works won't just work under one set of risk management conditions. It's statistically unlikely that it only works for one set of risk management conditions. It's more likely to just not be enough wins for the losses or enough RR, and the only way you can adjust that is by picking better entries. So, what would I do if I needed to tweak this because it doesn't work? I can either add a condition or I can adjust one of the current conditions. Now, you can go and change settings. Let's start, for instance, by looking at the settings on this. If you pick a particularly complex indicator, or an indicator you don't know the mathematics behind it very well or anything, what would I do? I'd normally just change the numbers via like a lot and see what they look like. So I might go into here and change that to 50 and see what it looks like. Did that visibly change much? I don't think so. No, not really. I might also go in for this and go, right, let's change that to 15. See what that looks like. Smooths it out. What does this one do? If I change that, it smooths it out a bit more. And then I need to ask myself the question, did I want it to react quicker or slower? Now, for a lot of them that we were going through, I was looking at going, I'd kind of like it to have reacted a bit earlier. But then if it reacted earlier, it would have given too many opportunities. So at that point, you might be going, well, I need two indicators. One that's a quick indicator, that's giving me opportunities along a trend. So, for instance, it sees this is going to be a nice buying trend, and it goes bang, 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 and gives you like 4 good entries along the trend. And then you want a slow one to say, hey, I think the trend is reversing soon. And then you know not to enter any more of them. So it prevents you trying to go bang, 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 bang up this bit so much. Even though, sure, okay, this one you might have got in and been fine, but if it reversed, you would have looked kind of stupid. So this is where you would sometimes go, well, let's just have like a pair of them. So if I pick, let's see what this one looks like. I don't know what this one looks like. Oh, it's that. Okay, you can go, you're not useful. In fact, I'm going to pick one of these. So let's pick this one. I'm going to cut that. We're going to make that solid. We're going to get rid of these. So for instance, when it's green would be bullish, and when it's red, no. Do I run it that way? When it's above 0, it's bullish. When it's below 0, it's bearish. That's going to give me a long-term trend. So for instance, it might be red, but it's still above 0. So I'd be able to take this buy here. I'd be able to just take this buy here. I could take any of the buys in through, like this one, for instance. I could have taken this one. Could have taken this here. So it's just giving me a long-term trend and a short-term trend. And between the two, when they're both lining up as a new entry, you can take a new entry, providing your risk management says you can. So I often would say you're going to have 2 trend detections, essentially, a longer term and a shorter term one. I always like to have an on-chart form of trend as well, which in this case is just those 3 AMAs. I'd be looking for them to be fanned out in the correct order, so if I'm looking for a bullish trade, it would be the 9 EMA above the 13 above the 34. It could be any EMA combo you wanted, but those were 3 I just picked. And again, now I have a set of, like a slightly different set of rules, go and test it. If I don't like it, then I'd change one thing. The most important part of when you learn scientific method in school, in science classes, is that they only ever test one thing. Because if you go and change 3 things at once, how do you know if it's going to work or not? You change one thing, you test it, you make an adjustment. You test one thing, you make an adjustment, you test it. Until you get to a point where it's good enough. You are not here to be the perfect trader. You're not here to go and have a 100% win rate. You're not here to go and have a 99% win rate. You're here to go and get a profit factor of like 1.1, 1.2, and that's all you need to worry about. Because if you were the bank, their profit factors for their algorithms are going to be like 1.00003. And because the amount of capital they play with, that's astronomical to them. Don't try and reinvent the wheel, just gotta be good enough. Okay? So yeah, test, redo, test, redo, test, redo, test, redo. Change one thing at a time, and eventually you will have something that you can go, well, I can trade it Monday, Tuesday, Wednesday. I could trade it London session only on this pair, this pair, this pair. That's good enough. No one's saying you need to go and populate like, let me just grab you. No one's saying you need to go and build yourself like this, which is going to tell you which pairs you can trade at any one moment on any day. it's not useful to you. Well, it might be useful to you, I don't know you, but most people this isn't useful. All you need to do is just get good enough, and to build a system, just test it, tweak one thing at a time, and fill your data out. And what will tend to happen is you'll go through when you've done a few back tests of a few things, you'll get through a back test, and midway through a back test you'll be like, nah, this ain't working, I need to do this. And your intuition will tell you, I need to cut my RR down, I need to bring my RR higher, because I can see them running longer regularly. Like, your intuition will be there to guide you, it's just you need to get a few under your belt to do that. Now, you're going to want a copy of this. I'm going to put it in chat quickly, just so you can quickly grab one. Just take a copy, and then you only ever really want to play with this bit. If you got that, and you can change these two numbers as well, that's all you really need to play with. If I go to combine risk management, now you might think that if you have a really good trading system, you want to risk as much as possible. No, because even if you have an 80% win rate, that still means that in 1,000 trades you could have 200 consecutive losses. Is it likely? No, absolutely not. Statistically, it's not likely, but you could. Here are two different risks to reward, two different percentage risks. You can see that even the difference between 0.5% and 1% risk per trade, sure, the net end result is higher on the 1%, but you can see the size of the peaks is like 3-4 times bigger. Now, if I made this chart, set up, can I change it to no, I want J2 colon J 1614. You can see that suddenly it's, yeah, sure, okay, it made an astronomical amount at that point there, but you can see that the swing, because of the risk, is so high that you end up almost back down here. Now, would you rather have something that you can do this and steadily creep up over time, or something where it's like, right, I've made it to here, and then you withdraw it down, and then suddenly you're now down at 0 again? You want to take this realistically, because the risk, sure, you might get lucky and go and be happy, like, I know you get to that 12,500, but realistically you're going to get there once. And if you won't withdraw it because you think that the streak is going to continue, so why would you withdraw it? You'll just keep going, and you've lost it, and you're back down here again. So you might as well take this, or some set that is slightly closer, like this one, for instance. This is a reasonable gain. I mean, you got to think that this time series is over what, like a month, I think. Yeah, literally like 3/4 of a month. If someone offered you 400, well, to go from 100 to 400 in 3/4 of a month, most people that's more than ample. Like, you don't have to worry. But to go from 100 to 12,500 was the peak. That's great and all, but then to end the month at 2.5, like, you're gonna fucking kill yourself with the emotions of that. Like, that's not an easy thing to trade. So don't risk too much. Now, the way I like to talk about risk management, we're just going to do it over in the corner over here. Most people do risk per pair, risk per trade, so it might be like GBP JPY, 1%, GBP USD, 1%, and these are all their individual active trades. CHF JPY 1%. Ord NZD 1%. And this is great and all, but when you end up with like, I don't know, 7 trades running and 4 of them have GBP pairs, they're all looking in the same direction, and GBP news comes out that it wasn't expected and it wipes out 4% off your account balance, it's not a great day. Do risk per currency, not risk per trade. So in this instance, if I go, as I'm entering them, I'd be like, right, I want 2 GBP positions, so I'm going to put 0.5%. And that means that I'm a net 1% on GBP. I would then go, well, I want 1% on any currency. So I'd see this and go, it's got JPY in it, so I can only enter a 0.5%. Because statistically, if this one goes up, this one should want to go up as well. If this one goes down, this one will want to go down, because they're correlating pairs. Ord NZD, it's the only one I want to take. I'm not going to take anything else. It doesn't line up with anything else, so I can enter the full 1%. And suddenly my risk per currency is 1%, and if a piece of news came out that went and smacked a stop loss, at most I'm going to lose 1%, where in this instance, if JPY news came out, I lose 2%, or if GBP news came out, I lose 2%, which is a quick way to burn yourself down to 0. Right, is there anything else I want to cover today? Do you have anything you want me to cover today? If so, then I'll quickly cover it. I think I'm covered enough. Did I cover enough? I feel like there's something I've missed. No, I think we've covered enough for now. We will do a lot more risk management going forwards probably, but of different asset classes and stuff. In fact, we might do a session each week on different assets. So I might do one on REITs, one on standard stocks, one on futures, one on forex, one on current, like different things. So we'll probably do that going forward. But I think in the short term, unless I can think of anything, that will be enough for today. I'm going to stop the recording and then I'll start again if I need to.